Yo guys, what's going on? Welcome back to Fulfillment Key. It's another beautiful day, June 8th, 2020, and today I'm going to be talking to you guys about a couple of decent dividend stocks that you guys should invest in. So let's get straight into that. Um, First of all, make sure to like and subscribe this video if you guys enjoy, and subscribe to the channel. I don't know why I said it like that, but subscribe to the channel if you guys like the video. And yeah, so first stock is going to be SPHD. Now, SPHD is basically a kind of dividend stock that tracks the higher dividend yield stocks within the S&P 500, I believe. So what this basically entails for you is a pretty high dividend yield, which is really nice. I'm currently in them as well, and I'm going to detail kind of my positions and stuff like that in my next dividend portfolio video, which is going to come out next week. But for now, I'm going to take a look at some of the price action and kind of go into that with you guys. So as you guys can see here, before we hit the coronavirus and we hit these lows back in March, the stock was trailing at about like 40-ish dollars. So 40 to $43 basically. And now it's currently at 37.61. Now, this is kind of a little bit of a steeper play because as you can see, it's jumped a lot in the last just week. So what I would say is you don't want to have FOMO and buy everything, and you don't want to miss out. So what I would suggest is buy in half now and then wait to see what happens in the next week or so, or the week after that. And if it does continue to go up, you can continue to buy in. But we should be seeing a pullback soon. So if there's a pullback, you guys should pull out. I mean, not pull out. Sorry. You guys should buy in on that dip as it goes down. And then you'll be able to dollar cost average down and basically make your average cost of entry to the stock less. But that's it for SPHD. Again, kind of safe dividend stock. Their dividend yield is about 5%, although I think it dropped because when I look at it on Google, it says 3.33. It might just be that it was 5 and then it went up because the stock price went up, but yeah, there's that. Next stock is Realty Income. Now, you're probably asking, what is Realty Income? Now, they are a REIT, and basically what a REIT is they're a real estate investment trust company which invests in different kinds of real estate, whether that's commercial, residential, and other different kinds. And I really like this stock because they have paid dividends almost uninterrupted for over 40 years, I believe. So that means they've weathered 2 to 3 different recessions, or mini recessions, whatever you want to call them. In their time, they went through the 2008 crisis. I don't think they cut their dividend there. And they haven't cut their dividend as of yet. In fact, I think it might have increased, or it might have stayed the same actually, but it looks like it went down over here, 4.36%. But let's take a look at the entry price of the stock. 70, before pre-crisis lows, we were seeing, around $80 to $72. And right now we're at 64, so there's a potential upside there, $15 per share. Might be something you guys want to look into. You can easily earn 20 to 30% here if you play your cards right. But like I said with SPHD, I would recommend that you kind of buy in half now and then wait for a pullback and then buy in the rest with the rest of the capital that you want to deploy on this stock, just because we've seen a lot of bullish action and I think we're going to see a bearish pullback soon. I'm not sure exactly where that is, which is why I suggested buying in half and then, kind of buying in the other half as it goes down. But that's Realty Income. We love them. Dividend stock, 4.36% yield. Now, if we take a look on Robinhood, it might say something else, which I don't know why it does that. I think Robinhood's one is kind of messed up, but, well, it's not letting me take a look here. I don't know why. Yeah, well, forget Robinhood. Let's get to the third stock, which is Delta Airlines. Now, Delta Airlines, big airline company. Beautiful, because they have a lot of flights coming in and out. They're one of the big names in the airline business. Now, as I'm sure you heard with the airlines, there was a lot of flights that had to be postponed or canceled because of the Rona crisis, and because of that, we were at around, as you can see here, between $60 and $56 at Delta Airlines, and now we're seeing $36.97. So again, a lot of potential upside, a 4.35% dividend yield. So another really good dividend stock. The only issue with this is, like I said, because of this whole airline hype that's been going on, these airlines have kind of been pushed up in price a little bit. So I would suggest, again here, buy in half tomorrow or the day after, whenever you can get in, and then wait another week and see what happens, because we might be seeing a pullback. Now, if we do see a pullback and the stocks go down, what I will say is don't get afraid and don't sell out. You see that downwards opportunity if it's below what you bought in as with the other half, to buy in the other half, because then there's even more potential upside and you can dollar cost average down, as I mentioned before. But that is Delta, great stock, big airline company. And you're going to notice the next two are also airlines, just because I think the airlines have the most potential capital appreciation. So I think that for the amount of money that you're going to put in, you're going to see maybe 20, 30, even 40% upside on top of that beautiful dividend payment that you're going to be getting from the stocks. So next stock is United Airlines, another great airlines company, although I believe, I'm not sure if they exactly had a dividend. I don't think they did. Actually, we can check that out right now. I believe they did have a dividend, though. I believe they cut it. No, so they don't have dividends, apparently. But that's fine. I would still recommend them because take a look at this. So if we take a look at the year chart, if this wants to cooperate with me, basically the year high is $96 based on the chart that I was seeing earlier. There we are. So $94, as you can see the high here, we're trading in between like 96 and 74. And right now we're at 48. So like I said before, this doesn't have a dividend, but you can use the profits that you make from this trade to be put into the other dividend stocks on this list. But I would trade this. I would get into this opportunity. Like I said, the half-half rule that I mentioned before. And that's a rule I want a lot of you guys to employ if you guys are trading stocks. Is if you guys are going to buy into a position and you don't know if it's reached a peak or if it's at an all-time high, I would suggest, buying with half, seeing how the market plays out. If it goes down below what you bought in at, buy more as it goes down. Never try to buy in all at once with all your money, because that's the worst strategy that you can do when you're trading or if you're buying stocks for long term, which is what I'm discussing in this video. But like I said, $48, still a good entry price, potential upside of 30 to 40% on this stock as well, because I think that after this crisis kind of blows over, not only are we going to be testing these highs, I think we're going to be hitting new highs once everything returns to normal and these companies and everyone gets a lot of anticipation to go on flights, travel, and these companies, the stocks see a lot of hype. But that's UAL. Now I'm going to get into Southwest, which is another airline company. I know you guys are probably like, DJ, oh my God, how many airline companies are we going to look at? Oh my God. Don't worry, this is the last one. The next one has to do with flights, but it's not an airline company. So Southwest, great stock. I personally have flown Southwest. They're kind of not like a high tier, airline company, but they're one of the very prominently used airline companies. They do pay out a dividend, unlike UAL, which is 1.77%, as you can see here. Not the best dividend, but it's a safe dividend, and I believe there's a lot of history behind that dividend. You might want to check me on that and look into it, but I believe I checked it a few minutes ago before shooting this video, and there was a history of paying dividends there. So if we look at the prices here, this one doesn't have as much upwards potential. It's $17, but I don't know how much of this, upside has already been reached, but I would still put my money in this stock because it's one of the prominent airlines. So if you want appreciation from the airline industry as a whole, you just want to be diversified in all of them in case something goes wrong, I would suggest buying into each of these and also get a dividend on top. But again, 30-40% up, potential capital appreciation on this stock. Right now at $38, and it potentially could go up to $57. But we're probably not going to see February highs for at least another year, so probably like 55 or 54 at the max. But that's still a really good price. You guys have to realize that that's like 30 to 40% capital appreciation. That's insane returns. And the reason I'm suggesting these stocks to you is because I want you guys to be able to get, as much upside potential as someone who's swing trading, but also be able to get that nice juicy dividend payment as well. So that's Southwest. Now I'm going to get into Boeing. Now, sorry, I'm sipping my water here. Now, Boeing. You're probably like, Boeing. I've been hearing a lot of stuff about them lately, like what's going on with Boeing. Now, to be fair with you, a lot of Boeing is going up because of a variety of factors, whether that's the airlines, going up, and there's other Boeing news that I haven't quite looked into. But trends-wise, if we take a look, the highest price before the stock crashed due to coronavirus was $330. So, and the 52-week high was $391. So right now we're seeing $230, which is high, but it's high for now. From a long-term perspective of things, it's really still a really good entry price, because you look at the last time we were at this kind of price was back in 2017. And it's 2020 now, we'll be able to get these kind of lows. But I will say, like I said, with generally my half rule, if you think something's kind of too high, you buy half, you wait to see what happens, and the next week you buy with the other half, and then you see what happens. Don't ever put all your money in at once. It's a terrible idea. I've done it before. It's how I learned, now how I have my rule. But yeah, Boeing, great stock, and a 3.57% dividend yield. So you get that nice juicy capital appreciation and that nice juicy dividend that we love, passive income. So there's that. Next one, MGM. Now, MGM, I believe, cut their dividend a lot because they were not seeing a lot of traction, a lot of people coming to MGM. But that's different now because Las Vegas is reopened, and MGM in Las Vegas is one of the biggest MGMs, and they're getting tons and tons of people coming in because Vegas is open. So that's why we've been seeing a surge in this stock. Now, I don't know how healthy this surge is, but I believe that because of the new, people coming in, and the business being able to reopen, there's a lot of upside potential still available with this stock. So I would still get into it. Like I said, my half rule still applies here because it is, another one of the stocks that has a lot of upside potential, but also could test those lower lows before going back up there. Of course, we're not going to see March level lows. Those were insane, because imagine if you'd got in at $9 on MGM. But we might be seeing maybe $15 again before we go up and test those, highs of 32 ever again. But I could be wrong with anything else that I say, and it could just continue to go up. But we always want to be prepared for that risk. We always want to buy in half now, see how it does a week and a half later, and then buy in with the other half. But that is it for this video. I know I've kind of rambled on here. I just wanted to get all this stuff on. But if you guys enjoyed, you guys want more juicy dividend stocks, you guys want more trading tips, anything like that, make sure to subscribe, like, and comment what you guys want to see in the next video. But that is it for this video. Hope you guys have a good day. Stay investing, stay safe, and make sure you guys do your research. And that's it. Peace.